It's time to do business again. Welcome to Business Incorporated, giving you updates from the world of business. And here is what we've prepared for you. We're starting off in South Africa. The producer inflation there has eased to 7.5% year on year. In South Sudan, the president has dismissed the central bank governor. Find out why. And Egypt has received 1.5 billion euro from the EU. Welcome to the program. I'm Ini John McCall. Start off as usual from the oil space, where we see for this afternoon prices moving higher after the United States launched a heavy wave of strikes against Iran late yesterday in retaliation against its missile attacks on American forces in the region. Of course, this is dashing the hope of de-escalation of the tension in the Middle East. Iran's Islamic Revolutionary Guard calls they have threatened further escalation in response. And all of this has led to a 0.12% increase in the price of Brent. We are back to $90 level, and WTI dropped a bit, but it's still up 0.54% at $84. And then closely related to that is natural gas. We see natural gas is now at $2.71. That has also eased a bit and not looking very good. The disrupted shipping through the Strait of Hormuz since fighting erupted late in February. And then the U.S., they had halted for 2 weeks that fire against Iran target, and diplomats sought to give peace talks. But of course, there's a revival of that, and that started with Iran, and now the United States, as expected, has retaliated. And then to metals now, we see a softer dollar now is lending support to metals this afternoon. Interest rate, we know yesterday left unchanged. That's also a factor considered in the metals market. So we see it green all through for major metals. Spot gold 1% up, $4,076.60. Spot silver almost 0.5% in the green at $58.35. 1.5% up is what we have for platinum at $1,626.80, and 2.5% is what we have in the green for palladium, $1,283, and copper does 2.27% in the green at $6.45. Remember that Mr. Walsh had kept the rates with the meeting. Of course, they had kept the rate unchanged yesterday, and most economists expected that, but what they did not expect actually was that there would be a group of members of the meeting who opted for a hike, 3 of them, but of course the other number did overwhelm that. We go to South Africa now. Producer inflation eased in the latest reporting period, and this signals a moderation in price pressures at the factory gates. The slowdown reflects softer increases in the cost of goods leaving factories, and that offers some relief for manufacturers and raises expectations that inflationary pressures may continue to ease. Economists say that the trend could support a more stable pricing environment for businesses and consumers if sustained. And South Sudan's President Salva Kiir has dismissed the country's central bank governor, the latest in a series of sackings and reshuffles in senior ranks of his government. Mr. Kiir announced the removal of Johnny Ohisa late on Wednesday. South Sudan's economy has faced mounting pressure from declining oil revenues, recurring cash shortages, high inflation, and currency depreciation. And of course, this would only add to the disruption that the economy is facing. In East Africa, Nairobi Revenue Authority has launched an aggressive debt recovery campaign targeting property owners who have failed to pay land rates for more than 3 years. The agency has appointed 6 specialized debt recovery firms to pursue outstanding arrears across the city's 6 boroughs. Officials warn that persistent defaulters risk having their properties attached and auctioned under the National Rating Act 2024 as authorities intensify efforts to boost revenue collection and improve compliance. And European Commission, in this case, has disbursed 1.5 billion euros to Egypt under the European Union's ongoing macro-financial assistance program, reaffirming the EU's commitment to supporting Egypt's economic reform and long-term macroeconomic stability. This 1.5 billion euro disbursement is the second of the expected 3 installments under the second MFA operation that's worth a total of 4 billion euros proposed by the Commission and adopted by European Parliament and the Council. The disbursement follows the European Commission's positive assessment that Egypt has successfully met the conditions required for the release of the second tranche. These include implementation of agreed economic policy reforms, continued progress under the International Monetary Fund, as the IMF program, and the fulfillment of political requirements set out in the Memorandum of Understanding between the European Union and Egypt. And the Ministry of Industry has set a target of generating $1 billion in manufacturing export earnings during the 2019 Ethiopian fiscal year, following a significant increase in export performance that saw revenues reach $607 million USD in the recently concluded fiscal year. Speaking at the Manufacturing Export Performance Review and Recognition Program, Industry Minister Melaku Alabel said that the government has given special attention to the manufacturing sector as one of the 5 key pillars identified to transform the country's economy. He notes that remarkable efforts have been made over the past 5 years of reform to expand the sector's contribution and ensure manufacturing secures a significant share of national economy. And the Ministry of Industry reaffirmed that Made in Ethiopia initiative, along with targeted policy measures and improved access to finance, has contributed to significant growth in manufacturing, production, exports, and import substitution. Speaking at the Manufacturing Export Performance Review and Recognition Program, the minister said that the sector's progress demonstrates the impact of National Made in Ethiopia campaign and the government's continued support for industrial development. And the Federal Competition and Consumer Protection Commission, as well as the Lagos State Consumer Protection Agency, they're ramping up efforts to strengthen consumer protection and promote fair business practices. They had a meeting with regulators in Lagos. The Federal Competition and Consumer Protection Commission, FCCPC, is meeting with the Lagos State Consumer Protection Agency, LASCOPA, as well as businesses and industry players in the state. And the essence is to strengthen compliance with consumer protection regulations. The meeting is also focusing on price tagging, minimum product labeling requirements, with regulators warning that non-compliant businesses risk enforcement actions. The General Manager of LASCOPA, Mr. Folabi Sholebo, emphasizes the need for transparent pricing, accurate product labeling, and fair return policies.
Regulatory agencies have escalated enforcement against unfair trade practices. Businesses have been sanctioned for displaying goods without price tags, for selling expired products, for misleading consumers with deficient labeling, and for refusing legitimate requests for return and refunds. These are not isolated lapses. They are systemic gaps that erode consumer confidence, distort fair competition, and weaken the integrity of our markets.
Representing the FCCPC Executive Vice Chairman is the Commission's Southwest Zonal Coordinator, Dr. Lubumi Dokasoti, who reiterates the right of consumers to clear pricing.
When consumers have confidence in the marketplace, they are more willing to spend. Businesses attract loyal customers and fair competition thrives. That is why today's engagement is so important. We are here to discuss 3 issues that affect consumers and business every single day: price tagging, minimum labeling requirements, and return and refund obligations. This may seem like ordinary aspect of doing business, but they play a vital role in building confidence in the marketplace.
The organizers say this is part of a broader effort to enhance consumer protection and market fairness across Lagos State. And let's go to the commodity space now. This afternoon we're discussing smartphones, whether for pleasure, for luxury, for business. Of course, we know smartphones have become indispensable. Communication, education, business, financial services. Well, they are next to our skin, and I don't think anyone can really survive without it. Looking at Nigeria's smartphone market, you see it's grown by 8% year on year, and that's the record for the first quarter of this year. And it's driven by demand for affordable 4G and 5G devices. And in spite of that demand, we've seen prices, of course, have escalated, but has this stopped demand? Or has it changed the trend of demand in Nigeria? That's what we're discussing this afternoon. And we're having that conversation this afternoon with Toju Megasin, analyst with Financial Derivatives Company. Hi, Toju. Good afternoon and welcome to the program.
Good afternoon, Annie. Thanks for having me.
Great. So obviously, it seems that the necessity of smartphones outweighs the cost of it if we want to go by the demand trend in Nigeria.
Yes, as you already touched on, smartphones have evolved from being just a basic tool for communication. It's now evolved to being an essential tool for communication, entertainment, digital banking, e-commerce, and even a remote work as well. So this has obviously made it more of an essential good, shifting it from a luxury good to more of a necessity good in today's society. And despite the, as you already highlighted, despite the high prices, the Nigerian smartphone market has actually recorded an 8% increase in amount of importation of smartphones that were letting into the country, and is being demanded. So it just obviously highlights the strong, resilient demand for them across consumers in Nigeria. And despite this strong growing demand, it's obviously highlighted also that Nigerian consumers are being more value cautious. So they've obviously opted for mid-range devices to older versions of premium models for affordability, alongside also exercising finance options in order to obviously afford these gadgets.
So it would have been really good if this increased demand leads to increase in production or productivity, or even the raw materials, which we know Nigeria has once again potential for. Can we connect this to in Nigeria's digital economy, increase in demand for smartphones, and then the production part of it?
I mean, in Nigeria, let me concentrate as Africa as a whole. We do possess an abundant and significant reserves in critical minerals that are used in producing these gadgets, such as cobalt, lithium, gold, and other earth raw materials. But the problem is that it just doesn't lie with, or having a successful or having a hand in this global smartphone industry doesn't just rely on having the minerals, but it's down to also highly skilled labor, advanced manufacturing, efficient logistics, as well as strong, reliable power, which we lack in our nation. So, for example, this is what China has used to leverage and actually have a stamp in the dominance in which they control 80% of total production globally, compared to when they had just a 50% share in 2007. In comparison to that, US has gone from 3% in 2007, 3.5% total share, to having just less than 1%. So that goes to show and underscores the importance of having a very well integrated supply ecosystem.
But in your research and all, what reforms or policies do you think can come from the Nigerian side, to help it maximize this critical minerals which the country already has?
I mean, all we can do again is just strengthening our trade relations with, like I said, Africa as a whole has an abundance of these resources. So if we strengthen our relations within interconnect into trading nations, in order for us to leverage off that, as well as allowing incentives for these production facilities to run smoothly, as well as educating the workforce to have a highly skilled tech education in order for them to, again, like I said, China have that leverage based on them having all these foundations in place in order for them to have a successful and have a huge stamp in the dominance of global smartphones.
All right, Soju, thank you so much for sharing all of that with us, and do enjoy the rest of your day.
Thank you very much for having me, and have a great day.
You too. Let's head to the market now. We're starting with First Holdco again. Billionaire Mr. Femi Otedola is not letting up at all. He's threatening his position in First Holdco PLC. Today, he's acquired additional 1.77 billion shares. That's worth 222.2 billion naira through his investment vehicle, Calvados Global Services Limited. This latest purchase raises his stake in the financial institution to 25.88. The last time we talked about him, it was at 21.96. This is reinforcing, obviously, his influence in the company as the largest shareholder. And the acquisition is Otedola's second major investment in First Holdco this month alone. Signals continued confidence in the bank's long-term growth prospects. So if you're following Mr. Otedola, I guess you would also buy more of First Holdco. Well, he's the biggest shareholder. Anyway, in spite of this money that has been brought in through First Holdco, the NGX is negative at intraday. It was more profit-taking that we saw 0.29% down, 246,261.30. Johannesburg recovered. You know, we saw a deep red yesterday this time, but it's green this afternoon, 0.71%, 111,000 plus. And Egypt is negative, while Nairobi closed yesterday positive at 235.66. Moving over to the Middle East, we saw also for intraday mixed sentiment. Dubai is negative while Abu Dhabi is positive. Moving to the other markets, Tadawul is positive while Qatar is negative. In the United States, investors digested that very big number, excuse me, from yesterday. Investors, of course, were expecting that hold, and they got it. So I guess that makes the markets happy. But let's see what Europe does, or what they are doing this afternoon after that hold position. We have Chip joining us. Hi, Chip. A lot of people expected a hold. We saw a hold. Is the market happy?
Well, European shares have been rising, Ini, and the Stock 600 is actually up 0.7%, and the DAX is actually 0.3% higher. And that is because earnings are helping offset concerns over escalating tensions in the Middle East and higher oil prices. So energy stocks are trading higher today, Ini, and of course, we are also seeing gains elsewhere in banking and industrial stocks, which are also doing well, and surprisingly so auto stocks, including BMW, which was up despite, of course, disappointing earnings in the second quarter. Its pre-tax earnings fell 35% during the last quarter, and that is because of weaker sales in China and mounting cost pressures. Now, the car makers' profits have fallen to levels not seen since the outbreak of the COVID-19 pandemic during the first half of 2020, and these results come at a time as of course several media companies yesterday reported that BMW is planning to cut thousands of jobs by the end of 2027 as part of a broader restructuring effort.
Yeah, talking about the earnings, I think catchy one is BMW. What else can you tell us after those earnings?
Well, BMW's poor performance in the second quarter was largely driven by a steep downturn in its auto division, where earnings before interest and tax fell more than 60%. And of course, according to the several media reports on Wednesday, the car maker and its works council agreed on a framework for a downsizing program after 6 weeks of intense negotiations. And the decision was to cut 8,000 jobs worldwide. Now, most of those cuts will be here in Germany, where BMW employs about 80,000 people, and they will begin in October because, of course, Germany's strict labor laws and job protections are quite difficult, and that means that the company will be setting aside approximately 1 billion euros to pay severance packages. And while that will be, of course, expensive, it will provide BMW more flexibility with its costs in the future. And outside of Germany, BMW will be reducing its workforce through a combination of regular turnover and retirement.
All right, and it's not just BMW. Other German automakers are also announcing job cuts. And how does this BMW's reported restructuring compare with the moves of the others?
Indeed, Ini, it is not just BMW, but of course, BMW has generally been seen as weathering the auto industry's woes better than some of its peers. We have been talking a lot about Volkswagen, which is, of course, also Europe's biggest car maker. It has made more headlines about its ongoing challenges. And of course, VW is actually weighing up to 100,000 job cuts around across its 10 brands, and Mercedes also has a voluntary redundancy program. So these job cuts are happening everywhere in the auto industry here in Germany. But despite faring better than its German peers, BMW did also issue a profit warning last month, and that actually came as a bit of a shock. And BMW said that its business in China was worse than expected because of tough competition and a sluggish economy. And of course, BMW's business in China was already bad last year when it fell to the lowest level since 2017. And it is, of course, projected to be even worse this year because, of course, in the last quarter, which ended in June, vehicle deliveries were down 30% on the year in China. And this is why BMW is, of course, trying to find other ways that it can reduce its costs. And one of those ways is by reducing staff.
Unfortunately, some people have to lose their jobs there, Chip. Well, thank you so much for the update.
Thanks, Ini.
Let's head to the crypto space now and see the stories making the rounds right there. We see that Bitcoin has retained the green color from yesterday. If we could have that, thank you. 64,000, about what it was yesterday. In 24 hours, 0.85%. As well as Ethereum. Ethereum, we saw recover to 1,900 yesterday and has retained that. And then a couple of greens also. But let's see the stories making the headlines there. The United States, they have imposed sanction on Iranian maritime company. They've accused them of using Bitcoin payment to evade international sanctions. A U.S. authority said that the firm facilitated cryptocurrency transactions to support its shipping operations, adding that the measures are aimed at disrupting sanctions evasion and limiting Iran's access to global financial system. Now, whether this is connected to the war or not, that's another question. But I mean, this is the reason that the United States is giving. And then we go to the United Kingdom, where we see the UK FCA sees bigger role of stablecoins in cross-border payments. And remember that recently we had told you how the UK is also looking at more regulations, in the crypto space. So now they see bigger role of stablecoins and cheap. They say it could be cheaper and more efficient. And the potential is to reduce settlement times and payment costs, while stressing that appropriate regulation is essential to protect consumers and maintain financial stability. And then we go to strategy. They are set to release their latest quarterly earnings, with investors closely watching for updates on its Bitcoin holdings. That's what gets right there. And then that's all we have time for cryptocurrency as well as Business Incorporated. And we have to thank you so much for your company all through the program. Tomorrow is Friday. Well, thank God it's Friday, yeah? We'll do that tomorrow, but thank you for being a part of the program.